Hey everyone, it's Hamish Hodder here and welcome back to another My Investment Portfolio for March 2019. In the month of March, my portfolio outperformed the S&P 500 and the Australian Top 500, the All Ordinaries. So it was a good month for the portfolio and I'm excited to share with you all of the details of how that went in this video. As per usual, we'll start by going through my asset allocation. How much do I have in cash versus how much do I have in equities or stocks, and how has that changed since the last month, and what are the reasons for the change in assets in the previous month. And then we'll go through each of my holdings. So each of the stocks that I have in my portfolio, we'll see what percentage each of them make up compared to last month. We'll look at how the stock has performed individually over the past month, and we'll talk about anything that's happened in the past month to do with that specific stock. Then we'll have a look at the portfolio performance as a whole. We'll talk about the capital gains, the currency gains, and the dividends that I received in the month and compare that to the US and Australian markets over the past month. And lastly, I'm just going to talk about what trades I've been making in the market within the last month, and what activity am I doing in the markets, and what do I plan on doing in the next month. So if you enjoyed the video, make sure you leave a like and let me know your thoughts down in the comment section below. But for now, guys, let's jump into it. So we'll start by talking about my asset allocation, and as every other month in the past, I still only hold two types of assets. I hold cash and I hold equities or stocks, and the percentage change really hasn't been that drastic. In February's video, I had 48% in cash and 52% in equities, and I now have 47% in cash and 53% in equities. So just a 1% change there. And the two main reasons that contributed to that 1% change in my cash and equity position was that the first thing, my stocks overall were up for the month, which meant that the equity proportion of my portfolio increased, making it a bigger proportion than cash. And the other reason is that my cash position increased less than usual because from my income sources, I put less money into the portfolio and I put more money towards my business. So there was a lesser increase in cash relative to equity, and those two factors contributed to a 1% increase in the amount of equities that I have relative to the amount of cash that I have. So with that out of the way, let's talk about the individual businesses that are in my portfolio. The first one we've got here is NAB stock, National Australia Bank, and this one makes up about 4.6% of my portfolio, and that's down from 4.7%, so no real change there. And this stock in the past month is up 3.5%. So the reason that it didn't grow in terms of a percentage in my portfolio, it went down 0.1%, was because even though the stock was up in the past month, it was up less than some of the other stocks in my portfolio. So other stocks grew their size and this stock shrunk its size even though the stock was up for the month. Nothing else really to say here. I pretty much say the same thing every single month on this stock. I will be looking to offload it in the future and move that money into a better investment, and it's just because this is an investment that I made very, very early on. It was probably my first or second investment and I've just held it on this entire time. But there's nothing else really to say here. So the second stock that we can get into is YY stock. So this is a Chinese speculative position that I have, and this one makes up 6.5% of my portfolio, which is up from 5.5%. So a considerable increase from the previous month, a whole percent. And that's mainly due to the performance of the stock. So in the past month, YY reported their earnings, their quarterly earnings, and they were great. Their revenues are growing and their paid and free users are continuing to grow at double digits. And as a result, their stock is up over 15% in the last month. So that contributed to this stock becoming a bigger proportion in my portfolio. The next one we've got here is Facebook. I'm sure you've all heard of Facebook, and this is another speculative position in my portfolio, probably a little less speculative than the YY Chinese investment, just because Facebook is such a massive company in the US and globally. Facebook, it makes up 8.7% of my portfolio, which was down from 8.8%. So again, no real change there. And the reason for that is because the stock is up 4.8%, which again is lower than some of the other stocks in my portfolio. Facebook in the past month announced that they will be coming out with an app that will combine the messaging apps of Facebook Messenger, WhatsApp, and Instagram. So that'll be quite interesting. It's their sort of attempt to consolidate their platforms and also bring their users to use all of their platforms. They want to expand the usage of their users from just using Instagram or just WhatsApp They want their users to be using all of their platforms so that they have more users overall, and it will mean that they have more spots for advertisers to advertise in front of, and they can increase the amount of revenue that they generate from advertisers. The next stock we've got is my index fund, which tracks the ASX 300, the Vanguard Australian Shares Index, and this one makes up 14.6% of my portfolio, which is down from 14.8%, and this stock has been up, so the Australian market has been up 2.9% in the last month, so again another positive one. And essentially with this one, I'm just looking to keep it at between 15 and 20% of my portfolio. I like having a whole market index that is the foundation of my portfolio that we know over the very long term is likely going to return somewhere between 6 and 12% per year, and it means that I can be confident that that part of my portfolio will grow into a large sum of money over the long term. So the position is currently slightly below 15%. However, I don't just want to wait till it drops below 15 to add more. I will be waiting and seeing it go a little bit lower before I contribute some more to this position. And the last stock, of course, is my biggest equity position, and that is Thor Industries. And Thor Industries makes up 18.5% of my portfolio, which is down from 18.7%. And the reason for it decreasing in size is because this is the one stock in my portfolio which is down in the past month, and this one was down 1.5%. Earnings came out for Thor Industries in the last month, and it disappointed analysts. For that reason, the stock fell quite considerably, but it's bounced back a little bit. If you want to see my full thoughts on their earnings, then check out the link in the description below, and I'll leave a card to it up there so you can see my full thoughts and see what I thought about the earnings update. Just as a bit of a hint, I thought it was fine. It was okay. Short term, it doesn't look good for the company in terms of their profitability in the next year or the next couple of years. But again, the long-term prospects of this company are still very strong, and I'm very confident that over the long term, they're going to generate large amounts of cash for their owners. So next, let's have a look at the portfolio performance as a whole. We like to break it down into capital gains, which is the appreciation of the prices of these stocks, currency gains, because I hold US dollars against Australian dollars, and also the dividends that we get out, the cash directly paid by these companies to me. So let's start with capital gains. The capital gain for the month was 3.68%. There was no dividends paid, so there was no dividend gain. And the currency gain was 0.4%, and that gives us an overall return for the month of 0.04%. And if we compare that to the US and Australian markets, the S&P 500 was up just 1.1%, so we almost 4 times the US market in the past month, which is excellent, and the Australian market was up 2%, so we more than doubled what the Australian market did in the past month. Both of those performances are very good, and it's what we like to see. However, of course, you know me, I'm a long-term investor, and whether or not we're beating or losing to the S&P 500 or the Australian markets in the short term, or whether or not our portfolio is going up or down in value in the short term, really doesn't matter to me. I would prefer to see these stocks come down quickly so that I can get more of my money invested in these businesses, buy a greater percentage of these businesses, and then reap the rewards of their future cash flows over the next 10 years. So the last part of this video is where I'm going to talk about what I've been doing in the markets in terms of trades. So in terms of stocks, I haven't made any trades in the past month. However, I did do a significant currency exchange from US dollars to Australian dollars. So what I did was I transferred over 20% of my US cash, or 20% of my total cash position actually, from US dollars back into Australian dollars. And that was actually for a gain of 4.91%. So quite a substantial gain in terms of currency. And the reason that I'm doing this isn't strictly following my investment advice, but it's sort of just a bit of a test, a bit of an experiment that I wanted to do to sort of see if I could rationally come up with a hypothesis, act on it, and see if it will sort of present itself in terms of returns. And that hypothesis is that the US has higher interest rates than Australia at the moment. So it means that if we have a recession, the US has more room to bring down their interest rates. And essentially, when a company brings down their interest rates, or when a country brings down their interest rates, it means that the demand for that currency goes down with it. And with that, the value of that currency against other currencies goes down. So my theory is that if we have a recession, or if there's a slowing economy where both countries, the Australian and the US countries, need to reduce their interest rates, the US are going to be reducing their interest rates further relative to the Australian dollar. And what that should do, in effect, is increase the value of the Australian dollar relative to the US dollar. Now, I'm certainly no expert in currency exchange. However, I have a small sort of knowledge. I have a small amount of knowledge in economics, and I'm very curious to see if this plays out. So my theory is that we're not going to see the Australian dollar fall too much further against the US dollar. So I'm thinking we're probably reaching somewhere of a bottom for the Australian dollar against the US. And for that reason, I moved a lot of money out of US dollars into Australian dollars, which should mean the Australian dollars will get stronger against the US dollars. So it'll be interesting to see what happens there. I certainly don't really care over the long term. It isn't really going to matter, but it will be interesting to see if my hypothesis plays out as I expect. So I hope you guys enjoyed this one, and if you did, of course, make sure you leave a like and let me know your thoughts down in the comments section below. If you're new around here and you want to see more information about stocks and how to invest, and also talking about my portfolio like in this video, then make sure you hit subscribe and join the team and hit that notification bell so you don't miss out on any of the future notifications. But I hope you guys have a great day, and I'll see you in the next one.